The Bombay Stock Exchange is more than a century older than the National Stock Exchange and still has only 10% market share.
NSE और BSE दो बड़े एक्सचेंजेस को टक्कर।
The National Stock Exchange of India.
For this, after all, is the Bombay Stock Exchange.
BSE is the oldest stock exchange in Asia and has enjoyed a monopoly in the Indian stock market for more than a century. There were several other exchanges too, but no one could beat BSE. But it was only in 1994 when NSE had started its operations and
NSE as the new wave of stock exchanges.
Just within a year, it surpassed the daily turnover of BSE. What was so special about NSE? And what does it mean for a beginner in the stock market? Let us figure it out in this video. First, let us understand the history of BSE to understand how it stood in the pre-NSE era. We all know that the East India Company controlled India in the 18th century. These guys began trading in loan securities for carrying their expenditures on military, trade and wars. As this grew, corporate shares too began to be traded in the 1830s in Bombay. The stocks of banks and cotton presses were the first ones to be traded. Cotton was in extreme demand as it was being exported from India due to ongoing American Civil War. The famous banks like the Bank of Bombay, Bengal and Madras too turned joint stock. Joint stock companies are companies where multiple investors hold the company's stock. Thus, the concept of stock trading was brought by the East India Company, whose own stock at that time traded in the Royal Stock Exchange in London. As this grew popularity, informal stock exchanges grew in Bombay. The number of brokers were next to nil and they would do their work under the shade of a banyan tree. The location of which banyan tree wasn't fixed. However, the number of brokers grew in quantity. One of these brokers was Premchand Roychand, who was a cotton merchant and started brokerage in 1849. He was the first Indian broker to be able to read and write English, and it was him who in July 1875 established the Native Share and Stockbrokers Association, that is, the present day BSE, and fixed a location for trading purposes. At that time, in 1875, 318 people joined the association after paying the princely sum of 1 rupee. Just for the facts that 1 rupee amounts to more than a lakh today if we account for inflation at 9% per annum. Continuing, this association decided on having a hall for their activities, that is, the present day Dalal Street. BSE was a success and saw several important precedents and people contributing to its growth in the coming years. As it grew, companies of several sectors like textile, railways and plantations too emerged as joint stocks. Also, looking at its success, other stock exchanges emerged. Some of them were Ahmedabad Stock Exchange in 1894, still operating Calcutta Stock Exchange in 1904, and the Madras Stock Exchange in 1937. Why this didn't work out is the story of another video. Talking about the Bombay Stock Exchange, it not only enjoyed a monopoly but also survived some major events in the history like the World Wars and the 10-year-long Great Depression from 1929 to 39. It also saw a drastic change in the control as India gained independence in 1947. After independence, many of the foreign-based companies listed on the Bombay Stock Exchange exited, and also the heavy capitals brought in by the Britishers withdrew. The Indian government was interested in regulating the financial sector and passed some important acts like Securities Contracts Regulation Act in 1956, which aimed to bring transparency in the market. Also, BSE got the recognition of the government in 1957. This overall benefited BSE as it had gained higher credibility and trust. Also, more and more exchanges emerged in Hyderabad, Ludhiana, Delhi, etc. The BSE still single-handedly beat them all due to its higher credibility, vast customer base, and high liquidity. It also launched its popular index, the Sensex 30 in 1986, which culminated the growth of the top 30 stocks in the market. So what exactly went wrong for BSE that NSE wiped out its business? Well, though the BSE was enjoying a great business, there were some issues. Number 1. Trading took place as open cry system. If you have seen the Scam 1992 series, you will better understand. Thus, there was no technological advancement seen and trading wasn't easy for people from all corners of the country. It also went through several scams. Some of them were very big, like the Harshan Mehta scam of 1992. Number 3. BSE was completely broker dominated, as it was completely in the hands of the brokers. The investors could only give money and had to trust blindly. Also, the joining fees of BSE was reportedly expensive. Number 4. There weren't any proper regulatory checks which gave the way to malpractices. Tackling the problems, government set up the Securities and Exchange Board of India, that is SEBI, in 1988 and in 1992 made it an autonomous body, which meant it had complete independence without external involvement. Another thing government decided to do was to set up another stock exchange. Yes, the NSE in 1992. It was decided that the rights were not to be limited to just brokers but anyone who was qualified enough. NSE was recognized by SEBI in 1993 and it commenced its operations in 1994. The greatest strength of NSE was it came up with electronic trading system, which enabled people from different corners of the nation to participate in stock markets. Also, since NSE was less broker-centered and set up by the government, it quickly gained people's trust. Though BSE backed up quickly by launching electronic trading in 1995 itself, by the end of the year, NSE had already surpassed daily trade of BSE. And since then, NSE as well maintained its dominance in the markets. It wasn't like BSE didn't try to recover its lost market. As said, it introduced the electronic trading quickly. But the NSE launched more and more products and also the super successful Nifty 50 in 1996, which went on to become the most tracked index. In 2000, NSE launched internet trading, even enlarging its reach further. Rolling over to the present day scenario, NSE still dominates the Indian stock markets and sees 13 times more trading volumes than BSE does. Currently, investors do choose it because of its greater liquidity. That is, stocks can be bought and sold in a faster and efficient way, and thus it holds more than 90% of the market share in almost all categories. And its revenue has been many times higher than the BSE's. Though it will be wrong to say that there is no significance of the BSE. The Bombay Stock Exchange is the fastest stock exchange in the entire world with average time of just 6 microseconds. It has a capacity to handle more than 5 lakh orders a second and is also the only Indian stock exchange that is listed on another stock exchange since 2017 and has more than 5,000 actively listed companies when compared to NSE's 2500. Talking about the other exchanges mentioned in the video, most of them are shut down. The active ones are Calcutta Stock Exchange, Metropolitan Stock Exchange and Indian International Exchange. But their sizes are the thing when compared to NSE or BSE. Talking about a beginner's perspective, it doesn't really create a lot of difference as presently both the NSE and BSE are technologically way ahead and share many similarities and are regulated by SEBI. But of course, NSE do see very high liquidity when compared to BSE. While on the other hand, BSE has more than twice as many stocks listed than on the NSE. Basically, since one can buy from the NSE and sell it in BSE and vice versa, it will be right to say that it is not a very difficult decision to make. Thus, we can say that though NSE leads, BSE remains a cornerstone of India's financial history.